Welcome back to The Explainer. Look, if you're operating in e-commerce right now, you already know the barrier to entry is basically zero. But achieving sustained high RPM profitability, yeah, that's a whole different mountain to climb. Today, we're answering the absolute biggest question in the space. How do you build a massive, highly sellable brand asset without taking on that terrifying upfront inventory risk? Let's break down the exact data-driven framework to totally beat the system.
We've all been there, right? You want that big, sellable brand, but the thought of a warehouse stuffed with dead stock keeps you up at night. It's the classic e-com trap. You're usually forced to choose. Either risk thousands of your own dollars on inventory you're just hoping will sell, or you run a low-risk, pure dropshipping store that gives you zero brand equity and terrible margins. It always feels like you have to choose between protecting your cash and building a real business. But what if I told you that risk versus reward problem is literally solvable? Enter what we're calling the 2026 e-commerce cheat code, the private label dropshipping strategy. And as our little stickman sketch here shows, this isn't about picking one extreme or the other. It's actually this beautiful hybrid strategy. It's honestly the perfect setup to start incredibly lean, learn the ropes, validate your market with real data, and then seamlessly scale up into a highly profitable physical brand. Okay, let's look at the stark contrast here between the old ways of doing things. On one side of that scribbled line, you've got traditional dropshipping. Sure, you're a low-risk commodity reseller, but your margins are incredibly thin, and you are building zero brand equity. None. On the flip side is pure private label. High margins? Yes. Real asset? Absolutely. But if you jump straight into that, you're risking your entire capital stack on a product you are basically just guessing people want. Let's ground this in some actual numbers for a second. A dropshipping store, you can launch that for anywhere from $500 to $1,500. But look at the profit margin, a really slim 15 to 30%, which, let's be real, usually gets entirely eaten up by your ad spend anyway. Now look at private label. The margins are fantastic, 30 to over 50%, but it requires serious upfront cash. You're looking at $3,000 to $10,000 just to get your first batch of inventory, samples, and branding off the ground. The math obviously shows why private label wins long term. But that initial cash requirement is a massive brick wall for most of us. So here is the absolutely crucial point. How do we combine the best of both worlds? Private label dropshipping is your hybrid method. Think of it like this. You are using the dropshipping model strictly as a rapid, real-world testing engine. That's it. You are not treating dropshipping as a permanent business model. Instead, you're using it to validate product demand with actual, real credit card swipes before you ever commit a single dollar of your hard-earned capital to custom bulk manufacturing. All right, here's the exact execution playbook. Step 1, you dropship 10 to 20 high-ticket products. This teaches you the ropes with virtually no risk. Step 2, track that data religiously for 30 to 60 days. Step 3, the moment you find a clear winner, you source it in bulk and brand it. Step 4, keep using that dropshipping side of your store to constantly test new ideas. You're basically using dropshipping as a metal detector. You use it to find the gold before you pay to dig the mine. But what exactly makes a winner during this testing phase? What are we actually looking for? Well, you need to see 3 or more consistent sales per week. This initial validation phase acts as a vital, non-negotiable filter. This is the exact data that is going to save you from buying dead stock. Because listen, if a product can't organically or profitably generate a few sales a week while you are dropshipping it, there is absolutely no way it's going to magically sell better just because you slapped a logo on it and bought 1,000 units. Make sense? But then, there's the magic metric, 50 plus. Once a single product is consistently hitting 50 or more daily sales, boom, your testing phase is over. At 50 sales a day, you don't just have a hunch, you have undeniable statistical proof of product market fit. This is the exact indicator, the precise moment you must transition to manufacturing a private label version. This is how you capture those massive margins and actually start building your brand asset. Let's break down the specific if-then triggers for making this transition because it's super important. We just talked about hitting 50-plus consistent daily sales. You also really want to see a healthy conversion rate. Maintaining between 7 and 9% means your marketing is dialed in and highly efficient. But take a close look at that third bullet point. If your customer return or complaint rate exceeds 5%, you have to move to private label immediately. Why? Because high complaint rates mean that your third-party dropshipping supplier is totally dropping the ball on quality or shipping times. At a 5% failure rate, you are actively damaging your reputation. You have to take control of product quality away from them and manufacture it yourself. So how does this actually play out on a calendar? Let's take a look. Days 1 through 30 are purely for testing those high-ticket dropshipping products.
get them out there. Days 30 to 60, that's for tracking the data, obsessing over conversion rates, and identifying your absolute best winning SKUs. By day 60 to 90, you are taking that proven data, negotiating with a real manufacturer, designing your custom packaging, and building out your private label brand. Literally, within a single business quarter, you can transform a zero inventory test into a highly profitable physical brand asset. It's wild. And the financial payoff here isn't just in the profit margins per item, it's in the massive long-term impact on your customer base. Just look at the difference in repeat purchase rates. Dropshipping typically hovers around a pretty dismal 15%. Customers might remember the product, sure, but they don't remember your store because the unboxing experience was totally generic. But private label? Because you actually own the brand, the packaging, and the entire unboxing experience, those repeat purchase rates can soar up to 70%. You are building a loyal community here, not just processing a one-off transaction.
So what's the ultimate payoff for putting in the work and making this transition? Well, first off, premium pricing control. Because it's your specific brand, you aren't stuck in a race to the bottom against 20 other competitors selling the exact same generic item. Second, those repeat buyers we just talked about, that means dramatically lower customer acquisition costs over time. Third, if you're selling on Amazon, having your own private label protects you from their incredibly strict dropshipping policy violations, which, let's be honest, can get your account banned literally overnight. And finally, the holy grail. You are building a sellable asset. A generic dropshipping store is nearly impossible to sell, but a private label brand with steady cash flow, that can easily be acquired for a 3 to 5 times annual profit multiple. That is a game changer.
But hold on, because I have to warn you about the trap. Scaling way too early. Listen to me, getting 20 sales because a random TikTok video went viral is not validation. True success comes from letting sustained, boring, consistent metrics dictate your inventory purchases. If you let your ego, or just a single viral spike, convince you to go out and buy $10,000 worth of inventory, you are completely abandoning the entire safety net of this hybrid strategy. Don't do it.
And that brings us to our final takeaway. If you remember nothing else from this explainer, remember this. Don't guess what sells. Let the data pay for your brand. By using dropshipping to validate and private label to scale, you are completely removing the guesswork from e-commerce. So the only question left is, what products are you going to test first? Thanks so much for joining me for this explainer, and I seriously can't wait to see what you build.